Hello, everybody, and welcome back to another edition of the CryptX LiveWire on Thursday, January 22nd. Russell, man, what an all-time high. Silver, a lot of markets climbing to all-time highs. So, gonna go and review that as always. And Monty, how you doing this morning, my friend?
Doing well, CJ. Doing well. Thank you. Thank you for asking. Lots to talk about today. What I want to talk about is some Bitcoin futures data in conjunction with open interest for Bitcoin and kind of where that's sitting, what strike price people are looking at. And I want to talk about kind of why they're looking at that particular strike price and what it could tell us about the future direction of price. But I'm very excited to hear you talk about silver because, man, that has just been a fantastic trade, continuing to really just drive the market higher. But also, I want to talk about the 10-year Treasury yield. We talked about that last week, how it was forming a bit of a bull flag formation. But now you can see that we've broken out of that formation. It's trending a bit higher. And I think on the back of the news that Trump announced, if you didn't hear, he spoke at Davos this morning, and he stated that he will not be using force to take Greenland. I think that is a good thing for the 10-year Treasury note and a good thing for the overall economy in general. So going to dive into that. But before we do, CJ, if there's anything you'd like to start with, please feel free to do so, my friend.
All right, sure. I think I'd like to just kind of talk about critical levels and what I've seen kind of in the Bitcoin macro trend. And so just give me 1 second and I'll pull up my screen here.
Okay.
All right. So you seeing my terminal here?
Yes, sir.
So I've been talking about this and harping on this in terms of the macro trend a lot. It doesn't mean we can't go up and retest the 200-day, but just to reiterate kind of the macro themes and what we've seen, I want to be very concise in this. But there's pretty much 2 steps or 3 steps that we've seen that Bitcoin bear markets have played out in. The first step is the close below the 50-week moving average. That is the initial confirmation, and specifically a close after a 1 to even 3-year uptrend in the Bitcoin price. So we've had that, right? The second step is when price falls to the 100-day or just falls deeply below the 50-day. This is where the counter trend rally typically occurs. In 22, you can see that we fell to this level, hit the 100-day, that's the teal moving average right here. And then we had the counter trend rally to the 50-week, where the 50-week was ultimately rejecting price. And that happened in the previous, not only 2, but previous 3 cycles. And that's kind of what we had just recently. I mean, I'll zoom in here in a little bit. We didn't, the 50-week is right up above 100,000 right now. And recently Bitcoin peaked out at around, 97.5. So we'll see if we have another retest. Also, this period of consolidation and, the counter trend rally after the close below the 50-week on average lasts between 12 to 10 weeks. We're currently on week 9 and we're about to finish that. So we have been consolidating here for a decent amount of time. The critical level that I'm watching for here is going to be a break below the 100-week moving average, which is this teal moving average. As you can see, each time throughout history, during a bear trend and during the 4th year of the 4-year cycle in Bitcoin, closing below that level has been pretty ominous because price has dropped basically straight to the 200-week following that close in a very strong capitulation type move. So I'm not saying that has to happen this week or anything. And, I think it's definitely possible we could bounce from these lows, but it's not that great looking that, Bitcoin's down 0.5% when we have the Russell making new all-time highs, silver and all of these other winners that are just winning so hard. I think you want to probably stick with those, right? Like we don't want to cut the roses and water the weeds, right? That classic old saying. But what I'm looking for, at least in the short term, is I want to watch for a close below this 50-week. Right now, it's about at 87,000, because that would be a big red flag, right? Every time we've closed below the 100-week, historically, we have a tendency to drop straight to the 200, which right now is coming up in the high 50,000s. So, and that would really complete the macro bear flag pattern that we've been talking about. So, I'm not married to this idea, right? I just think that if we get that close below the 100-week, that's like step 2 in terms of confirmation of this, bear flag pattern. But we still have to see. But tape's looking a little heavy. And like I said, I wouldn't necessarily rotate out of anything that's winning right now to buy a laggard in hopes that, you get a rotation of capital. In many cases, the ones that are winning, once they eventually top out or pull back, the mediocre performing assets just drop even harder. So we'll see if that's how things play out. But those are just kind of the risk levels I'm looking at for Bitcoin right now. But Monty, you said you had some options data, particularly with expirations of 100K strike prices. I'd love to hear more about that.
Yeah, definitely. Thank you for that information. And I think it will segue nicely into what I'm going to talk about here. And that is Bitcoin open interest by strike price. And you'll notice that we have a lot of people piling in here at the 100K level, buying calls. But we also have some puts really starting to pop up here. These weren't here like earlier in the week, but now we're seeing puts really starting to pile up 75K, 70K, 80K. So people are now anticipating the downside. This was very muted just a week ago, but given the recent price action, it looks like people are looking to protect themselves to the downside. And, CJ, a lot of people, looked at this 100K target, said that even in a bear market, this could be a possible target that gets hit. And we could see a lot of these calls really materialize. But I think that what we see here with this big spike in the amount of calls that expire in February for Bitcoin at the 100K strike price, I think about half of this is simply protection to the downside. Because in conjunction with this, one thing I want to talk about is liquidation levels and futures open interest, because futures has been definitely the driving force in this market. CJ, you talked about how you're a little discouraged by Bitcoin's lack of performance. I think a large portion of that can be attributed to the amount of longs we've seen liquidated in the last 24 hours. Over $1 billion worth of longs have been liquidated in the last 24 hours. And that in itself is enough to drive price lower. But also we have some liquidations to the short side. So you got a little bit of a battle going on where people getting long and looking at like the 91K level to get long are getting liquidated. But then people that are betting on the downside here and looking to go short at around 88K with 100x leverage are also getting liquidated. So that's kind of why we have sort of a doji-ish candle today. And we saw yesterday kind of this doji candle form. But, ultimately I wouldn't bank too strongly on a reversal. And that's simply because longs continue to get liquidated, even ones that are close to the current price of Bitcoin. So if you are entering with a 100x long here, you have to be very, very careful. But, tying those things together, obviously the 100K target for the options, if you're a futures trader, you can think of that trade as protection. So if you wanted to short the market in the hopes that it makes the move that CJ was talking about and heads down to the next moving average, well, you bet 100x futures short position on that, and then you buy the 100K call just in case the price, rallies against you and goes up to 100K, you have a little bit of protection to the upside. So much in the way that people, buy puts to protect themselves to the downside, I think people are buying calls to protect themselves from the upside in the same manner. So you have this protective buying going on. And I think that that's a large part of the reason we're seeing Bitcoin kind of show this neutral to negative price action without without much spot pressure coming in. This futures market is really dictating the direction of price. And what we're seeing right now is any longs that try and step in at around current price are getting liquidated pretty quickly. So I think you need to be careful. I think that level that you mentioned, CJ, of 87.5 is going to be a critical level for Bitcoin. If we do break down below that level, I think it's going to be a pretty sharp drop. And I think we'll see a lot of shorts pile in. So once we do see a lot of shorts piling in, and right now Bitcoin's funding rate is relatively neutral. So it's telling us that we have essentially the same amount of longs as we do shorts in the market. But I think if we get a move down below 87.5, we're going to see the shorts start to pile in. And that's when you need to start being a little bit careful when you're trading to the downside, because then you run the same risks that we're running trading to the upside here, where liquidations become a major factor. And I think that if we do get below 87.5, maybe we just put on a trade of like 3x leverage. Don't use 100x leverage, because those moves tend to get liquidated even during the strongest of bear market trends. So, yeah, I would say watch out for that breakdown level of 87.5. I think that the 100K target, a lot of people are looking at the call strike price and saying, hey, price may gravitate towards this level, as a lot of traders are stacked up at this price. But I do think that a lot of it is just protective call buying, people protecting against a move to the upside. So I don't put too much credence in the fact that we could get a move up to that level. So we talked about this a few weeks ago about how it was kind of switching from protective buying to speculative buying. But now we're seeing the exact opposite, where it seems like it's more protective buying and less speculative buying in the options market. So putting all those things together, I think, we need to prepare for a move to the downside. But, just keep an eye on Bitcoin's funding rate, make sure it's not overwhelmingly positive, and then you can short this market with a little bit more confidence. You're muted, CJ.
My mistake. Yeah, it's just whipping around in a range. It's tough to get a good read on stuff. And there's so many other markets that are just providing, I don't want to say easier, but I mean more clear opportunities, I guess you would say. And so let's go to a couple of those markets. First one I want to talk. Yeah.
Ties in with the question we got here. It says Bitcoin seems to be disconnected from its once cemented correlation with the Qs. Does this mean anything to you? And do you see it shifting away from being a risk on asset?
Yeah, it's definitely always been a risk on asset. And, even a few weeks ago when we saw metals outperforming stocks, they're still outperforming, but literal days when, the S&P was selling off, silver was still, going up and pumping. And we had been watching for like, okay, is Bitcoin going to behave like a metal? Is it going to behave like a risk asset in the Qs? And right now it's just kind of following its 4-year cycle trajectory, which is seeing weak price action in a midterm election year. And historically, when Bitcoin bull markets, real bull markets have started, it followed a recession in which the Federal Reserve pumped a ton of liquidity into the market. And I think that's much different from where we are now. That's a catalyst that's completely absent. It doesn't really matter that we're pumping liquidity into the market with Bitcoin, now 20 to 30% off its all-time highs. But, that's when the real bull markets start, is like after recessions, when there's ample liquidity, not necessarily when we've already topped and are coming down from the 4-year cycle. And that's just what happened historically. It could change, but it doesn't look to be playing out any different right now. So I'm just going to keep going with whatever's working.
Yeah, absolutely. I think that's what you got to do, is just kind of go with the tape. But, in terms of kind of the second half of that question, and do we see Bitcoin shifting away from being a risk on asset? No, I don't think so. I think that although we haven't seen a correlation to the upside in terms of positive price action in the Qs reflecting with positive price action for Bitcoin, I do think that there will still be a correlation to the downside. A lot of people think that because there was no correlation to the upside and Bitcoin grinded sideways and continued lower while the Qs made new all-time highs, they kind of see that as decoupling. But ultimately, I think that Bitcoin is still a risk on asset. And if we see the Qs crash or even just correct and come off their all-time highs, I think you'll see a correlation with Bitcoin in terms of Bitcoin going down with the Qs. So despite the fact that it hasn't performed alongside the Qs on the way up, I think on the way down, you can expect to see a pretty high correlation in terms of the Qs performance with Bitcoin. And that's just based on the fact that Bitcoin is still a very risk on asset, and it's very contingent on the performance of the greater equity markets as well.
Yeah, I could not agree more. And let's get to the fun part of the show.
Let's do it.
All right. So let's talk about silver, because what we've been focusing on in terms of trend following is silver and specifically positioning, because clearly the technicals are very overextended, and you could make a case for why they're overextended, but we all know trends can get very, very overextended to the point where oscillators aren't as relevant as maybe in a more choppy or mean reversion style market. So what I like to look at in terms of positioning is understanding where large speculator shorts are in the market. And we've talked about this before, but we have positioning data from the CFTC in the Commitment of Traders report. This is released every Friday, so we'll get it tomorrow. And I'm really looking to see how the positioning in the silver market change over this week when we get that report tomorrow from the CFTC. But based on this oscillator, as you can see, this is positioning data. So the large speculators in blue here, when they are at a value of 0 or just 100 or lower, right now they're at 9. That means they're a lot more net short than, say, retail in yellow or the commercials in red. Retail's clearly chasing this move higher because it's been in quote unquote easy trade for the last couple of weeks. It really hasn't given you any reason to get out from a technical perspective. And there's still a lot of shorts in the market. So this is not a crowded trade yet necessarily from the institutional side, because if it were, we'd see it much more reflected in the futures data, in my opinion. So where I would want to take profit in silver is if we see these levels come back to more of a neutral element and those large speculator shorts are actually closing, because once they close and maybe even chase it higher, that's when I think the market will actually top or at least go into a multi-month consolidation phase. But as of now, I am really stunned at how short these guys still are, based on the fact silver's like doubled in the last few months. So any thoughts on that, Monty?
No, I think it's just proof of your thesis that fading the large specs tends to be a very good trade. And, we talk about how you can use COT data, not necessarily to predict price, but as a good risk reward tool. And I think that looking at one thing that really strikes me is that we haven't seen any commercial distribution. I mean, very little relative to what you typically see during a move to the upside. The commercials are still very long. And as long as they stay, in that range of 80 to 100 and are mostly long, I think price continues to grind higher, because if you think about it, the commercials are responsible for dumping a lot of the supply on the market that essentially needs to be bought up by retail and large specs for price to go higher. So once the commercials start distributing, you really need the large specs and retail to step in. But when commercials are holding, you can just have retail max long and it will drive price higher, because of the fact that supply and demand has really shifted, where the demand is increasing and the supply is kind of remaining the same. So, I think that CJ's point to next week's COT data, I think that's going to be very, very important. I think if you see the large specs beginning to chase, then that might be a sign that, hey, this trade is starting to get a little bit crowded. It might be time to step away. But if you see them trying to fade this move and remaining short, I think we continue grinding higher. So just basically echoing your sentiments, but the fact that the commercials haven't started distributing, I think, is a very important factor in this price action.
Yeah, I think if you think about it conceptually, like a silver miner or an industry or a company that has a strong reliance on the price of silver, like they're going to sell it, right? They're going to sell their mining and their holdings, but they're hedging so heavily in case price keeps going higher, because they don't want to absorb that cost into their business. So they have to hedge it higher, which I think is just a really interesting situation given the fact how much price has moved. Another stock that we talked about in terms of like the narratives of this bull market in terms of energy, lithium batteries. We're starting to see it with robotics now as well. Fluence Energy, this is a lithium battery manufacturer, and they've done very well. And we were following this kind of a couple weeks ago, last week, when it really started to break out, and now that trend just kind of continues. It is overextended, yes. It is obviously very diverged from its 20-day moving average, but this is one of the best performing ones in the Russell 2000, and the Russell 2000 continues to be the market leader, at least as of now. So I think that's pretty interesting. And then the other company, I guess that's just kind of interesting to me. Teradyne has done really well, but another in the robotics field, they just had earnings a couple days ago, was Rich Tech Robotics. We had a double tap of the 200-day moving average here, and now price is starting to trend a little bit higher. Obviously, we have the shooting star or the inverted hammer candle today at the top of the uptrend, but we'll see how this thing goes. Either way, I think I just want to harp on the fact that we are in a very strong trend in terms of a lot of these market narratives that I mentioned: energy, robotics, AI, obviously. And what's interesting is that Apple, Microsoft, a lot of the big names, even Amazon that we were talking about last week, they've come off a lot, right? And the Russell is just screaming higher, which, this rotation trade is clearly working for whoever is in it right now. But we'll see how long that can be sustained.
Yeah, absolutely. Good stuff there, CJ. Thank you for that. One other thing that I wanted to briefly mention that I think is important, and we talked about it last week, but I think it's worth mentioning today, is one of the trades that was particularly crowded, and that is Zcash. Now, Zcash obviously performed very well all throughout the last calendar year. We saw some very nice price action while Bitcoin was showing signs of weakness. And a lot of people were banking that this one could continue to grind higher. But ultimately, as you can see, we put in a low here, and then we put in a higher low, or a lower high, excuse me, and price has since decreased. But one thing that's keeping this candle green right now is the fact that this trade is very crowded to the downside. We talked about it during yesterday's webinar, but if you were trying to short this one, the funding rate was very positive. So that tells us that there were a lot of people trying to short this asset and expecting it to come down and break below this previous swing low. Ultimately, we're not getting that though, and you're seeing these shorts forced to cover, and as a result, price is kind of going counterintuitive to the Bitcoin trade. So despite the fact that this one showed high beta to the upside all throughout the beginning of this calendar year, I think that the relationship to the downside is going to be a little bit more tenuous, because as shorts pile in and shorts are forced to cover, you see price move up, and people get scared and they cover their short position. So I think that when you take a look at Zcash and the price action that is going on, and also you take a look at the futures positioning and the funding rate, I think this is one that's going to grind down, but on the way down, there's going to be lots of sharp moves up to the upside that liquidate people that are just trying to make an easy short trade. So one thing I will say that I think maybe is a better option is looking at the Zcash Bitcoin pair. This to me is it looks very similar, but ultimately that this is a good bet for me, because I think that if you expect it to show high beta relationship relative to Bitcoin, then this is the pair you want to trade, because as Zcash goes down, all you need to do is underperform relative to Bitcoin for this trade to make money. And I think that that's something that's definitely on the table given this recent price action that we saw, and it's overall very strong performance all throughout the last calendar year. So the fact that we have Zcash still sitting up at these high levels here tells me that there is room to play to the downside, but you need to be very careful, because the liquidations that occur, the flash liquidations that occur when this trade gets too crowded, can really force you out quickly. So that's one thing I wanted to mention. And then transitioning to one other thing that I wanted to briefly talk about, and that's Coinbase. Now, if you're looking to short Bitcoin, I think that Coinbase is actually an interesting vehicle to do so. And one thing that you talked about yesterday, CJ, that I just want to reiterate today is we still have this gap to the downside that has to fill, that was set all the way back here. And it looks like that gap wants to fill in the next couple of trading days here. So if you are looking to buy puts in Coinbase, I would look at around the 215 level, 216 level, not too far off current price, but, enough to make a difference. And, given the lackluster performance of Coinbase relative to the performance of Bitcoin, I think that this one is almost a safer short play than just shorting Bitcoin outright. So this one, I think that is going to come down, fill this gap. Then we might get a move back up towards the moving average. But ultimately, in the meantime, I really like playing this to the downside. If you think that Bitcoin is going to head down, you might want to speculate onto coin, because I think that that is a better vehicle to do so. So that's kind of what I'm seeing in terms of the technicals for Bitcoin and for some of the crypto related equities, but would love to get your thoughts on that as well.
Yeah, I mean, I agree. It's a little, overextended from its 20-day, but that momentum to the downside is quite strong. So, and 80% of gaps fill. So, we will see, my friend. But that is all for us today. If you guys would like to see more analysis, including trade ideas, webinars, weekly reports, check out the 2-week free trial at stickytrades.com/CryptX. And we will talk again soon. Thanks, guys, and have a great day.
Take care, everyone.